Good morning to another exciting week to look at business topics all around the world. It is Business 360 and my name is Blyden Ukem. In Business 3 by Faith interest rate decision, the second quarter GDP growth, the PCE price index and earnings results for several big corporations. Elsewhere, investors will closely follow monetary policy updates for earlier. Additionally, it should be interesting to track the second quarter GDP growth for South Korea and France, along with fresh PMI and interest rates data are expected to be out across Africa this week. Now to UK. Rains in the year, some major dough. The monarch received £26.2 million, an equivalent of the massive 45,000 acre spread known as the Duchy of Lancaster, from Queen Elizabeth II when she passed away last fall. The land, which is about the size of Washington, D.C., amasses millions of dollars annually in rental income. Not only that, but Charles isn't obligated to pay corporation taxes, unlike most businesses to Twitter. Twitter owner Elon Musk has said he wants to get rid of Twitter bird logo and replace it with an X. However, Mr. Musk also has a history of making statements that fail to happen or are not serious. Mr. Musk, who has changed the name of the business to X Corp, said the replacement should have been done a long time ago. According to reports, the billionaire wants to create a super app called X, similar to China's WeChat. He said on Sunday he was looking to change Twitter's logo, and I quote, "And soon we shall bid adieu to the Twitter brand and gradually all the birds," he said. Typical of Elon Musk and the stories that comes with Twitter in recent times. On AI safety and the technologies with it. 7 leading companies in artificial intelligence have committed to managing the risks posed by the tech. According to reports, this will include testing the security of AI and making the results of those tests public. Representatives from Amazon, Anthropic, Google, Inflection, Meta, Microsoft, and OpenAI joined US President Joe Biden to make the announcements. It follows a number of warnings about the capabilities of the technology. The pace at which the companies have been developing their tools has prompted fears over the spread of disinformation, especially in the run-up to the 2024 US presidential election. The pledge is heavily focused on safety risks, but doesn't address other worries about the latest AI technology, including the effects on jobs and market competition, according to reports. Let's hear from President Joe Biden regarding the safety of the technology companies.
Artificial intelligence promises an enormous promise of both risk to our society and our economy and our national security, but also incredible opportunity. Artificial intelligence promises an enormous promise of both risk to our society and our economy and our national security, but also incredible opportunities. Over the past year, my administration has taken action to guide responsible innovation. And today, I'm pleased to announce that these 7 companies have agreed to voluntary commitments for responsible innovation. First, the companies have an obligation to make sure their technology is safe before releasing it to the public. That means testing the capabilities of their systems, assessing their potential risk, and making the results of these assessments public. Second, companies must prioritize the security of their systems by safeguarding their models that are necessary. Third, the companies have a duty to earn the people's trust and empower users to make informed decisions labeling content that has been altered or AI generated, rooting out bias and discrimination, strengthening privacy protections, and shielding children from harm. And finally, companies have agreed.
And that is President Joe Biden speaking amid the announcement and agreement of commitment for the security and safety of finalized a groundbreaking $1 billion exposure swap aimed at releasing more sovereign lending headroom and strengthening the African Bank's capital adequacy measures. This exposure exchange is the second transaction of this kind for the African Development Bank following a successful agreement in 2015 with the Inter-American Development Bank and the World Bank Group. By facilitating a synthetic exchange of sovereign exposures in a risk-neutral manner, at the 58th annual meeting of the African Development Bank, the President, Dr. Kinwumi Adesina, spoke on the theme, mobilizing private sector, financing, climate, and green growth in Africa. Let's find out more.
Welcome to the 2023 annual meetings of the African Development Bank Group with the theme, mobilizing private sector, financing for climate and green growth in Africa. Sharm el-Sheikh brings back some great memories for us. It was right here that the world met for COP27, the place where the world again renewed its commitment to keeping global warming to 1.5 degrees Celsius. It was right here, under the excellent leadership of President el-Sisi, that the world made the historic decision on loss and damage on climate change. Before us is full of challenges on climate change, no doubt. But it also has and holds massive opportunities on green growth for our economies. To mobilize a lot more private financing for climate change and green growth, governments and development
to cut printing costs. The 1,000 shilling paper note will be gradually phased out due to heavy soiling and frequent reprinting. The move is part of the measure in Nigeria. Nigeria's Federal Inland Revenue Service, FIRS, reports a historic tax revenue collection of 5.5 trillion naira from January to June 2023. The collection exceeds the mid-year target by over 100%, with 3.76 trillion naira coming from non-oil sources and 2.03 trillion naira from the oil industry. Improved voluntary tax compliance, streamlined tax administration processes, and stakeholder engagement contribute to exceptional performance, setting the stage for a promising second half of the year. So looking at businesses across the country, construction firms borrowed 21 trillion naira in 4 years. Real estate and construction firms in Nigeria were able to secure loans totaling 21.89 trillion naira in 4 years, so contributed 93.14 trillion naira to Nigeria's gross domestic product during the period. According to the sectorial analysis by the Central Bank of Nigeria, the real estate sector secured a loan of 8.22 trillion naira, while between May 2022 and May this year, Nigeria's interest rate rose by about 8%. However, data from CBN revealed that borrowing by real estate firms rose from 15.16 trillion naira to 21.89 trillion naira, representing an increase of 44.4% between January 2019 and December 2022. Now to the oil sector. Oil marketers have insisted that the current prices of petrol in Nigeria were not a true reflection of the market. They projected a further price preview and review this month. Less than 2 months after the price of petrol was hiked from 189 per litre, 189 naira per litre to 500 naira. That demand was granted when some filling stations operated by the Nigerian National Petroleum Company Limited reviewed their pump price. Former chairman of the Major Oil Marketers Association of Nigeria and Chief Executive Officer, 11 PLC, Tunji Ayebanji, said that oil prices would reflect current market realities. According to him, this is what is obtainable in other neighboring countries, African countries that import petrol. PMS price per litre sells around 617 naira per litre in Nigeria, 1,169 naira in Mali. In Ivory Coast, 986 naira per litre, Cameroon, 986 naira per litre. In Ghana, it's 948 naira per litre, Togo 945 naira per litre, and Benin 877 naira per litre. So all marketers are saying prices should go even higher, just as it is in other African countries. United Airlines grew its operational and operating revenue by 17.1% to $14.2 billion in the second quarter of 2023, compared to the same period in 2022. In a statement announcing the financial results, the company reported quarterly earnings per share of $3.24 and pre-tax margin of 9.8%. Its net income appreciated to $1.1 billion. The momentum from the second quarter was expected to power the company to full year 2023 adjusted earnings per share of $11 to $12, up versus previous guidance of $10 to $12. It would be a good time to look at global economy and talk about economic data all around the world, from the US and to Africa, beginning with the US. The US has now seen 12 straight months of disinflation, but that doesn't mean that consumers will immediately experience from any day-to-day benefits. Here is what we need to know about the tangled dynamics of inflation, disinflation, and deflation. The CEO, Proper Trading, Scott Bois, has more on these details.
They move relative to one another. There are three ways consumers can experience relief from high inflation. Disinflation, which is slower inflation. DFS has now seen 12 straight months of disinflation in the annual headline CPI report. However, when people talk about relief from inflation, they often mean lower price levels. That is deflation, or negative inflation. If inflation is higher than the increase in wages, purchasing power goes down. In times of deflation, when prices are falling, purchasing power increases as long as wages remain the same. If your income rises faster than inflation, your purchasing power rises, just as if wages increase and prices remain the same, workers can buy more goods, so purchasing power also increases. Consumer spending has remained strong despite
We'll go on a quick break. When we return, we'll be looking at data releases all across Africa. Don't go anywhere.
increase the purchasing.
Welcome back. It is Business 360. My name is Blyden Kim. Talking about data all across Africa, we'll begin with Morocco's economy. Morocco's annual inflation rate eased further to a 15-month low of 5.5% in June 2023, down from 7.1% in May, as food inflation slowed to 11-month low of 13.1% against 16.1% in May, and transport costs declined substantially. There was also a slowdown in prices of restaurants and hotels and communication, while inflation was steady for education 4.5%, housing and utilities 1.1%, and health 0.5%. The core rates, which excludes volatile items, stood at 5.6% in June after a prior 6.4% hike. On a monthly basis, consumer prices fell by 0.9% in June, reversing a 0.4% rise in the previous month. Let's move to the charts indicating Morocco's inflation rate to see the standings on a one-year period. Inflation rate in Morocco. According to reports from the Haute Commissariat's AU plan, July inflation standings in Morocco stood at 7.7% July 2022. It went upward to 8.3% before hitting 8.1% in October 2022. As of January 2023, inflation rate in Morocco had gone up to 8.9%, hitting a peak of 10.1%, indicating high cost of commodities in the country and a weakness in the currency of that country, before a gradual slowdown to 7.8% in April 2023 and currently 5.5%, indicating improvement in the economy and the standard of living of the people of Morocco. Now to Ivory Coast. Still talking inflation. The annual inflation rate in Ivory Coast stood at a nearly two-year low of 4.1% in June 2023, easing from 4.8% in May, as prices slowed down primarily for food and non-alcoholic beverages in the previous month, on transport, restaurants and hotels, and miscellaneous goods and services. On a monthly basis, consumer prices surged by 1.5% after decreasing by 0.2% in May. Sale on sale, let's look at the chart indicating Ivory Coast inflation rates. Inflation rate in Ivory Coast. According to standings and reports from Institut National de la Statistique, in Ivory Coast, July 2022 indicated inflation rate at 5.4%, went further upward in January 2023, it hit 4.8%, indicating improvement in the cost or lowering cost of commodities and improvement in the currency of the country before beginning to go higher again to 5.2% and 5.2% in April 2023, then a slowdown to 4.8% and 4.1%, indicating a lowering standing in the cost of commodities in Ivory Coast and the value of currency becoming stronger. Now to the commodity markets. Oil prices eases as central bank meetings loom. WTI crude futures eased below $77 per barrel in the early hours of the morning today, pausing a recent rally as investors turned cautious ahead of key interest rates and their decisions from the US Federal Reserve and the European Central Bank this week. Both central banks are widely expected to lift rates again this month, though traders scaled back bets on further monetary tightening this year amid easing inflation. Meanwhile, oil prices remain close to the highest level in 3 months as the prospect of tighter global supply and stronger Chinese demand boosts the outlook. United Arab Emirates Energy Minister Sohail El Marouz said on Friday that actions by OPEC Plus to support the oil market are sufficient for now, and that the group is ready to take further action if needed. Meanwhile, China is expected to introduce targeted stimulus measures to support a faltering post-pandemic recovery, while it's known that China is the biggest importer of oil. Still talking about commodities. What can silver's duality offer to investors? Let's have insights from Bob Isino.
Silver is a unique metal with both precious and industrial characteristics, and this duality is why silver is often overlooked when considering its role as a general metal to express a view on the direction of the economy. Historically, silver has been used as a currency, but it no longer plays a significant role in the global monetary system. Gold, on the other hand, remains closely associated with central bank reserves. It acts as a store of value in times of economic uncertainty, reinforcing its safe haven status. Silver is critical in various industrial applications like electronics, solar panels, photography, and medical devices. About 50% of silver demand comes from industrial uses, making its price sensitive to industrial and economic activity changes. This also makes interpreting its price movements as an economic indicator less straightforward. Historically, gold has been the primary precious metal used as a safe haven asset, and copper has been the primary industrial metal used to gauge economic cycles. This perception makes it difficult for other metals like silver to take center stage. Silver is a unique metal with both precious and industrial characteristics, and
That's our outlook regarding silver. Let's move to the metal market and see what the prices of the metals are this morning, and afterwards the energy market and agricultural market. The market this morning. The market this morning has shown positivities and negativities one way or the other. But for gold price, it's gained 5.2 points this morning, a 0.26% appreciation. $1,965 per ounce is the price of gold. Silver, no significant difference in the market. Copper, slight decline in the market this morning. For steel, steel price has gained 22 points, a 0.59% appreciation, 3,736 on positivity, but the volatility level is quite low this morning. Crude oil, which is the West Texas Intermediary crude, current price is $77 per barrel, gaining 0.674 points, a 0.88% appreciation. For Brent, which is Nigeria's price benchmark, the current price is $81 per barrel, gaining 0.816 points, a 1.02% appreciation. Natural gas seems to be this morning. Soybeans has gained 18.75 points this morning, 1.25% appreciation. The current price for soybean is $1,519 per bushel. Wheat price is going up amid the disarray regarding the Black Sea ports, that disagreement between Russia and the rest of the world. Wheat price is $736 per bushel, getting 38.76 points, a 5.56% appreciation. Palm oil has gained 157 points this morning. Current price is 4,192 Malaysian ringgit per ton, and that's the outlook in the market. And quickly, let's look at the foreign exchange market. At Nigerian naira rises by 1.9%. At the close of last week, top currency gainers were Nigerian naira at 1.9%, Brazilian real 0.62%, and Colombian peso 0.27%. The biggest losers were Russian ruble at a negative 1.23%, Japanese yen a negative 1.18%, and Zambia's kwacha at negative 1.1%. Quickly, let's look at the price of the naira against the US dollar in the market this morning to see if it's in tandem with last week's outlook. The price of the Nigerian naira has shown that Nigerian naira is struggling against the US dollar gaining 17.5 points over the naira this morning, 792 naira equaling $1 US. For the euro against the naira, it's 881.06 naira equaling €1, a 2.4 points gain for the euro, a 0.28% appreciation, and the pound is 1,017 naira to £1, a gain of 1.4 points, indicating a struggle for the naira. After becoming the best pay in the market last week, the struggle begins this week. Here we draw the curtain on today's edition of Business 360. My name is Vlad Kim. Thank you for watching.